Hello.
Yes, sir.
Start, Raja.
Good afternoon, everyone. I, C.A. Raja Murthy Sharma, Vice Chairman, Jaipur Branch of CIRC of ICI, the moderator of this webinar. We are delegated to welcome you all to this webinar, which is being organized by CBA Committee of ICI, and we are pleased to announce that we will be organizing this webinar series on every Friday. So please block your calendar on every Friday to get insight into various emerging and high-value technical topics. It is my pleasure to be moderator for this webinar on bank audit, LFAR and adjudication proceeding in GST. In a short while, we will start this webinar. First, I would like to apprise you about CPE committee. The role of chartered accountant is evolving continuously to accept new responsibility in a dynamic global environment. The future of CA profession depends on being flexible and open to innovation. Therefore, the need of the hour is to innovate as per the requisites of the business environment and accordingly upgrade the curriculum and education system of chartered accountancy course. The committee also believes that members of ICI should look beyond the traditional area of practice and seek and explore new area of business and profession and enhance the CPE committee is mentoring the members by providing guidance through various workshops, seminars, national conference, background materials, and simultaneously by encouraging young and dynamic professionals to grow speaker and master of CPE programs. Now I welcome Chairman of CPE Committee, C.A. Satish Gupta, sir. C.A. Satish Gupta, sir, is a Central Council member of ICI for the term 2025 to 29 and has served as a CCM for the term of 2019 to 2022. He currently serves as a Chairman of CPE Committee and has been Chairman of SMP Committee of South Asia Federation of Accounts and CSR Committee in the past. He has received several honorary awards such as Excellent Branch Award and Special Silver Shield Award during chairmanship of Jaipur Branch, Best Member of the Year 2004 Award, etc. He has written more than 8 papers and has delivered lectures in different seminars, RRCs, webinars on topics like GST provision, income tax assessment, reassessment under Income Tax Act. Now I request to CA Satish Gupta, sir.
Thank you, Raja. Thanks a lot. My dear friend Arpit Haldia ji from Jodhpur, a very renowned practitioner, a very renowned writer, and a renowned chartered accountant, Arpit Haldia brother from Jodhpur. My brother from Surat, originally belonging to Bhilwada, my young son, C.A. Rohit Porwal, and my dear friends who are attending in a very large number this webinar, and definitely the team of the CPE committee and tech committee. I welcome you, each one of you, in this webinar, which is very important for all of us. Friends, as you are aware, CPE committee is organizing as many as program on physical basis, and they are also organizing weekly webinar on every Friday on different subjects. Since bank audit is on, we have arranged these 3 seminars especially for our members. The day 1 has gone 1st of April, today is 2nd, and 3rd will be on 4th of April, covering each at least one topic on the bank audit. Friends, CP, as we all are aware that it is mandatory for all the practicing members up to the age of 60 to get 20 hours in a year and 4 hours unstructured and 16 hours structured. By attending these webinars, every member who attends this will get 4 hours unstructured learning, and those will be automated there in their account. So this is a wonderful idea to provide this particular webinar for our members. And today's webinar has 2 speakers and 2 topics. One is Mr. Porwal, who will take the topic of the LFAR in bank audit, and another is my brother Arpit Haldia from Jodhpur, who will take the adjudication proceedings in GST litigations. Both are very important topics, and I know both of the speakers personally, and after hearing them, there will be definite value addition, and you will all feel that it is really great moment to attend this webinar. My brother Raja Mordwaj, who is Vice Chairman of Jaipur branch, has moderated this session. He is a wonderful chartered accountant, very young and efficient and energetic, and definitely he's going to be a very good and big leader in the times to come. And so, friends, I would not take your much of time, because I want that you get benefit out of 2 speakers' deliberations. So let us hand over the mic to Raja for the further proceedings. I wish you all the best. Thank you very much. Thanks a lot. Over to Raja.
Thank you so much, sir, for giving your precious time to us. Now, I request our first speaker, CA Rohit Purwalji. CA Rohit Purwalji is a CA in practice and has more than 11 years of pre and post qualification experience in the field of bank audits, and is a nominated member of Banking, Financial Services and Pension Committee of IIRC. He is regular speaker on the topic of bank audits and income tax, and has rich expertise in statutory bank audits. He has experience in representing cases before various tax appellate authority. Rohit sir, please.
Thank you, Raja sir, for a brief introduction. Hope my voice is audible. Can you please confirm?
Yes, sir.
Okay, thank you. So first of all, I am thankful to the CPE committee for organizing this webinar. I am thankful for the Satish sir, Vishnu Agrawal sir in absentia, CPE committee, and every member of the committee, my co-speaker Arpit Haldia sir for being joining here. I am thankful for the CPE committee for organizing this webinar. Satish sir has given me a responsibility to share the knowledge on the LFAR, and I have given the time of around 45 to 1 hour. I will request Raja Bhai, once my timing is about to reach, because the LFAR is not a topic which can be concluded in less than 1 hour. So it is a topic of 3 hours, but I will try to summarize and cover up those topics which are more important, where the chances of reporting, where the reporting requirement is so important, and we should not miss over there. So I will try to touch upon the LFAR that also. And before starting, today is the 2nd. We must be starting bank branch audit from tomorrow. Or many of the members has started the bank branch audit. My humble request to everyone: kindly go and read the format of LFAR. It is very well available on the website of Reserve Bank of India. My request is kindly read the LFAR. There was way back, the LFAR was previously in 1998. It has been modified, but recently in the year 2021, the Reserve Bank of India has updated the format of LFAR. We must have faced that we could not plan the bank branch audit in a good manner, and because of the limitation of time, which is the part and parcel of the bank branch audit. We know that we have to complete the audit within a period of 10 days. Now onwards, since last 2 or 3 years, the RBI has given only 2 branches to the individual chartered accountant. So still our pressure has been reduced by 1 or 2 days. But at least we have to complete the whole bank branch audit of 2 branches in a period of 10 days. So we have to plan and perform the audit in such a way so that our work should be completed on time with efficient, by covering all the regulatory requirements, which is the requirement of Reserve Bank of India or the bank or the ICI. So firstly, before starting my session on LFAR, I want to share 2 most important things. Firstly is we should read the LFAR before going to the branch. I have already shared one LFAR format with certain answer which should be reported. many of the people or many of us chartered accountants, because I have done the central statutory of one bank, I have got a chance to read more than 2000 of LFAR. Many of the points our blank or auditor are giving us, taking on own responsibility, where they have selected a sample size of little bit advances. So we are writing a comment like that. We are not writing in such a way that based on sample selected, we are giving this opinion. We are giving a clear-cut opinion that yes, the same found satisfactory or verified it. So my request is, I will share the LFAR format with suggested answer. We should write based on our sample selections. First thing is this. Second thing is, our LFAR answer should be very clear based on the sample selection which list has been given in the point number 5 of LFAR. So these two things should be noted very carefully. Now, another point. Another point is, in LFAR discussions, I will highlight and more focused on the advances part, which has been informed by the CPA committee. So the committee has, because the advances is the most important part of our total verifications. So in this, LFAR itself will give a planning of 70-80% of the audit work itself. Just LFAR will give planning of at least 70-80%. But again, the utility or given by the CAQ will also be helpful for everyone to comply all the requirement of the bank branch audit. With this, I will like to share my PowerPoint presentation. It will be supporting to me. Just a second. Raja sir, can you, any of the member can you please confirm it whether it is visible to everyone or not?
Sorry, sir. Yeah.
Thanks. Okay. This is a disclaimer. If I will be sharing any example from my personal experience, then kindly take this in my personal example and don't take it otherwise. The opinion is not of the CPA committee, neither of ICI. It is my personal opinion and my professional, not my professional life. So, when we are reading the LFAR of the many of the branches, we find that at many points where the requirement of MOC is there or the qualification is required in main audit report, but we are merely writing in the LFAR. Why I mentioned the first point, because I just want to convey that the main and audit report, that is statutory branch audit report as well as LFAR, both are separate. LFAR is for the purpose of management. This question has been asked by the Reserve Bank of India, but the main audit report is a self-contained document. So my humble submissions to every member is, LFAR is not substitute of the main audit report. So the cross-reference should not be given. I'm sharing one or two examples. Para 4.2.1, which says IREC norms, if the stock statement has not been submitted for more than 180 days, or the DP has been calculated on stock statement older than 90 days, the account will become out of order. And it will continue for 90 days for out of order, that account will become NPA for technical reason. Where one topic we are mentioning, where one point in the LFAR, we are mentioning the stock statement for more than 6 months has not been submitted by the borrower. But at the same time, we are not giving an MOC and qualification in audit report, because in that case, the IREC norm says that account should be classified as an NPA. But we are merely writing in LFAR, which should not be the case. Similarly, the account has pending for review for more than 6 months. There is a point in LFAR, we should mention that yes, the account is pending for more than 2 short review has been already been expired. And that para we are mentioning, yes, there are some cases where the short review or review has not been, full review has not been done for the more than 6 month period. But we are not passing the MOC. This is raising a question or incompetent. Then we are non-compliant to the regulatory requirement. So the cross-reference should be avoided. Yeah. Now, as I already requested, I will not going through the point-wise para of LFAR. My humble request to everyone, kindly read the LFAR just once before starting the audit. I will cover the head and major points of LFAR. So the LFAR has been divided into 4 para. That is, first is asset, second is liability, third is profit and loss, And fourth is general. General LFAR will also cover the contingent liability and the point which required required some special attention by the auditor for the perspective of Reserve Bank of India. Now the assets have 6 points, that is cash, balance with other banks or Reserve Bank of India, money at shortfall notice, fourth is investment, fifth is advances and other points, other assets. I will first cover and touch upon the cash. What is the requirement of, we all know that the requirement of cash is we have to verify the cash on 31st March. As we are not going to verify the cash on 31st March, we should not mention that yes, cash has been verified in Delhi. Many of the chartered accountants are not writing this, but actually we are verifying the cash on 3rd and 4th of the April. So we should mention that based on our reverse calculations and based on verification of 4th on so and so date, if I am verifying on 4th day or 3rd day, based on our verification on 4th and 3rd of April, we found that the cash has been tallied with the books, whatever the showing in the bank book. The reason is when we are writing that the cash has been tallied on 31st March, our allotment of branch is itself received on 31st and 30th, and we could not even visit it to the branch. So we should not comment that the verified and found correct. So we should say that based on audit procedure performed, we found that the case is tallied on 31st March. Same with this, cash in ATM should also be verified. In many of the banks, the handling of the ATM is given to some outsourced agency. So we should take the details from outsourced agency. They generate a slip. They check the cash. If there is difference in cash, the reason of short and excess cash should be taken. This must be showing the sundry and suspense account that should be verified. Any excess on short cash should be given effect within 1 or 2 days in the relevant account. If it is identified, if it is not identified, the reason should be informed to us. If there is a short cash, the sufficient more than period of 90 days, it should be given effect in the balance sheet. If it has not been effected, there is a point of MS. Insurance of cash, we generally found that the cash is short. The Reserve Bank of India and our bank has maintained a limit for every branch for holding of cash. Why cash holding limit is important? Because the central office takes a policy for the cash at a central office level based on the retention limit of the branch. If the branch is holding a retention cash over and above the retention limit, there are good chances of loss to the bank. So we should check whether there is a insurance taken or not. If we are not getting the policy, we should rely that it is informed to us that the cash insurance policy has been taken by the RO or central office. But if it is not provided to us, we should specifically mention that. There may be cases that my branch has been left from the insurance policy because we have not verified. So our answer should be strict through this. Custody of cash is very important. At many of the point in our statutory branch audit, we found that both of the keys is maintained by the single person. That is either head cashier or either the lower cashier. There is a point of risk. If it is during your audit observation, during your audit, you observe such kind of activity, then kindly report in the LFAR. Surprise case visiting. In relation to case, my point is this only. In case many of the people message me, sir, I am getting the branch audit of currency chest branch. How should verify it? There might be cases of 400 crore or 500 crore rupees. The currency chest should be verified based on the size of cash. In the currency chest, we have got an opportunity to verify. We need not to verify all the cash. The cash size from the square feet, square meter and height, it is verified through that only. And remaining loose cash only we need to be verified through hand or machine counting. That is it. That point I came because yesterday one of the member has asked me on the WhatsApp that how to verify the cash of currency chest because the balance is more than 150 crore. Okay, coming to the bank balance with other banks, many of the banks has the balance in balance sheet. How we should came to know if, that any branch has any other bank account in the SBI or Reserve Bank of India or any other bank. So we should check the balance sheet in the asset side. If we are finding any balances, then even if it is a nominal balance, my request is to take the confirmation from the directly bank. It will be following up on the standard of auditing external confirmation requirement. Secondary, if any transaction has been done during the whole of the year to that bank account, we should came to know. And if need to check further, we can take the assurance of. I said the balance confirmation has to be taken. Let them. We found some differences between the balance given by the balance confirmation of the other bank and the balance which is reflecting in the balance sheet of the bank because of some charges which is levied by other bank but not debited into my bank account. So if there is a differences, if the differences is a greater amount, certain limit has been decided by the bank for 10,000 rupees, 1 lakh rupees of amount, the MOC should not be passed. Then the correction should be done on the date of auditing. If the balance differences is more, then the MOC should be passed. With this, balance sheet bank will be okay. Money, call notice, and investment. I have merged the slide. The reason is generally both of the point is not applicable at the branch level. If any because after 2012, no branch is authorized other than the central office or dedicated branch to do the investment and deal in money at shortfall knowledge. So still, if you are finding any asset that is investment in any of the branch balance sheet, kindly confirm the physical document of the investment, or whether it is in the demat format, take the statement of demat account. That verify that. If you find the investment, kindly check the income booking of these investments, whether it is correctly credited in the P&L of the branch or not, whether the recognition of interest has been done, or interest or the dividend as the case may be, that has to be checked. A little more, not more than 10 to 20 branches of every bank is having the investment. Rather, otherwise, all the investment has shifted to treasury and treasury of the office of the bank. So with this, investment will be completed. Now coming to the most important point, that is verification of advances. Now I will say the RBI has done a good thing and one which is favorable as well as adverse to me. Because from now onwards in 2021 LFAR, I have to provide a list of advances verified, checked by me during my audit. In that case, it is good thing and bad thing for me. Because good thing is this, as an auditor, we have to select a sample, our opinion, whether the financial statement are free from material statement, giving a true and fair view is based on the list of samples selected and risk matrix, which is decided by the auditor itself. We are not required earlier to share the list of audit samples selected, but now onwards, we have to provide the list. So we will be responsible for the account which is shown in this list. But I can say we are also only responsible for these accounts. So if it's because there might be 4,000, 5,000 loan account in the branch, more than 20 or 30,000 of deposits account. So if these number of accounts we have selected sample, then we will be responsible for only these accounts. Now, how to do the sampling? I will touch upon a little bit. The sampling should be done, which should be cover all of the population of the branch. Population means in case of advances, the advances is like education loan, home loan, personal loan, retail portion vehicle loan, and now coming to the CC account, OD account, term loan. So the whole populations and advances segregation should be covered. Gold loan, agriculture loan against deposit is also important from the para whether the security is correctly lien marked or not, interest has been correctly taken or interest has been correctly charged, correctly rate of interest decided or not. So the whole advanced portfolio should be covered. The advances further should be covered. Some portion of the account which has been sanctioned in the last year but disbursed during the year. Some portion that sanctioned during the year should be selected to check whether the documentation requirement is completed. Pre-sanction and post-qualification, post-sanction requirement has been done and complied with or not. So the sample size should be selected in such a manner so the good amount of portfolio should be covered for the purpose of our audit opinion. Now, RBI said, okay, some sample can be selected by you based on your judgment, but a compulsory sample selection has been given. So if account is for any branch, the sample selection should be based on the limit, that is 10 crore or 10% of the aggregate advances of the branch. Now the word aggregate advances is including two things, that is fund based as well as non-fund based. Take an example. I am taking an example. My branch advances fund base is 400 crore rupees. Non-fund base is 200 crore rupees. Then 10% will be a 60 crore rupees amount or 10 crore rupees, whichever is low. Then in case all the accounts having outstanding value, fund based and non-fund based, including more than 10 crore rupees, should be compulsory under audit. There might be 10 or 20 accounts, then it should be part of your compulsory sampling. Other than this, you can select any of the account for your sampling. Now, other advances, as I mentioned in my PPT, large advances, all the cases of major adverse feature deficiency and should be reported on the account more than 10 crore and 10% of aggregate advances of the branch, whichever is less. Now, I am giving another example. If my advance of the branch, including fund based and non-fund based, is 80 crore rupees, then 10% of 80 crore is 8 crore and 10 crore, whichever is less. Then the advance of 8 crore and above should be taken for compulsory sampling. Now, in case in 80 crore branch, if none of the account is more than 8 crore rupees, then what should be done? Then in that case, there is no compulsion to select any sample from the part of regulator. Now, whatever sample you want to select, you can select. Now, in that case, many of the people ask me, sir, which account should be selected? Then the selected account should be the higher amount. Top 10 account of the branch should be compulsory under audit, even if it is not asked by the regulator. Now, for other advances on test check basis, the auditor may comment upon the relevant aspect generally, along with the instances of situation given rise to the doubts. Other sampling can be selected based on irregular account, which always a part of my sampling, that is SMA and PNP account. If any account is continuously under SMA 0, 1 or 2, then that account should be my sampling list, in the sampling list. The reason is that account might facing a technical difficulties or a financial difficulty, and we might have left that account. Or a branch or bank has tried to save this account by one or another reason, because we are aware that how the bank save an account from NPA, classification from NPA, by doing a recovery on last day. If that may be case, you can find some good sampling based on action. I will be discussing a few important points in the later slides, but I just shared this. Audit of loan in advances. Now, type of advances in the bank branch audit is fund-based as well as non-fund-based. In fund-based, the type of advances is two, that is retail or MSME. The retail is home loan, car loan, personal loan, gold loan, loan against deposit. And the MSME loan can be the business loan, that is industry loan, the loan against loan for the purpose of CC, OD or term. This is the major loans. Other than this, there are sector of agriculture which has to be checked. Type of non-fund based loan. Non-fund based loan is bank guarantee, LC, letter of credit, bills of bill discounting work, packing credit, PC and PCRC, that is foreign currency packing credit and packing credit in Indian currency. This is the overall advances you can find in the bank. Now, what has to be checked in the advance? So, the RBI has given segregations in the 5 points. Firstly, credit appraisal. Secondly, sanction and disbursement. Third is documentation. Fourth is review monitoring. And fifth is supervision. The credit appraisal is coming fifth when I mentioned the credit appraisal is evaluations of the loan. It should be done it is done before the loan has been sanctioned. How much the capacity, how much the amount should be sanctioned, what is the capacity of repayment of loan. I am taking an example of home loan. As per many of the bank policy, the home loan should be given based on the EMI calculation or the percentage of total property value. If a person is taking a home of 1 crore rupees, then the bank can finance 80 or 90% of overall loan. Now 90%. Now second thing is the credibility of the borrower has to be checked. EMI repayment capacity has to be checked. Now take an example. It is if a person is getting a salary of 50,000 rupees per month, and as per many of the bank guidelines, the EMI payment should not be more than 60% of overall monthly income. So in that case, if a income of a person is more than 50,000 rupees, then the EMI cannot be more than 30,000. If a person is businessman, the 50% or 60% of total income should be considered for the repayment of EMI loan. We have to check that whether the sufficient income proof has been taken or not, whether the valuation of a property has been done or not, whether the stamp duty value has been identified and taken by the bank or not. So these are the points which should be checked based on the policy of the bank itself. Now, repayment of the loan should not be more than 25 year or 30 year as the case may be. Also, the maximum repayment up to 70 year is also allowed, only allowed. So if a person is age of 50 years, even the policy of the bank allows for a repayment of 30 years, but in that case, up to 75 year is only 25 year is allowed. So EMI should be calculated in such a manner that the repayment should be done within 25 years. So that credit appraisal based on the sanction note as well as policy of the bank has to be done. Secondly, sanction and disbursement. Main point in sanction is, in my view, is sanctioning authority should be checked very correctly. Because every bank has decided the sanction power of every authority. If a branch is headed by chief manager, then its power is 1 crore rupees. If the branch is headed by AGM, the power may be 2 crore rupees. Over and above that, loan account should be sanctioned by the circle office or regional office. More over and above, it should go to the regional office. And after that, it is coming to central office. So the loan should be sanctioned by the competent authority. In case of sanction, individual loan should also be checked, and the group exposure by that bank also be checked. If a loan is, let's take an example, 2 crore falling under power of AGM of the branch headed, but the group exposure is coming to 7 crore rupees, the loan should not be sanctioned by the AGM. It should be sanctioned by the higher authority. I found major problem in sanction beyond delegation is in short review cases. Everyone should be aware the loan, as per RBI guidelines, every loan should be sanctioned, reviewed. Every working capital requirement, that is CC and OD, should be reviewed once in a year. The rule is the loan should be reviewed within period of 180 days after its expiry. Also, the another policy is the account can be short reviewed for a period of 2 times, not more than 180 days. Now, question is whether the short review can be done by the branch manager or not. Raja sir? I will be more interactive because मैं अकेला बोलूँगा थोड़ा interactive. I will be taking your view. So, if a loan which has been sanctioned by a higher authority, that is regional office or central office, can the short review done by the branch manager or not? So, in my opinion, it can't, because the branch does not have a delegatory authority to done. Even if a short review for a single day should be done, it should be done by the sanctioning authority only. So you can find the sanction beyond the delegation or renewal beyond the delegation. Same like disbursement terms and conditions, pre and post condition. Some pre-condition has to be satisfied. When I am giving an example of pre-sanction disbursement, that is capital contribution. The the borrower should bring a amount of 1 crore rupees. It is mentioned in the sanction. Before disbursement, the part margin should be bring by the borrower. We found that non-compliances of this terms and condition, because the margin money has not been bring by the borrower, disbursement has been done by the branch. So this is non-compliance of sanction terms and condition. How we came to know about it? My humble submission to everyone that the non-compliance of sanction terms and conditions should be checked in all the accounts which has been sanctioned in the month of GFR, that is January, February, March. Every bank and branch wants to compile with the compete with the target given to the branch. In that case, March month has been very important. Many of the sanction and disbursement has been done. You may find that the sanction and pre-disbursement terms and conditions not been complied. So it should be checked very properly. The reason is these are the important accounts which has been sanctioned as well as disbursement during your period of time. Okay. Thirdly, documentation. Now, documentation when came into the picture, my first, most and foremost important document is sanction note. Sanction note is a very important document because the reason is it is an agreement between this is the first agreement between the borrower as well as bank. Now you should check each and every loan which you are checking whether the sanction has been accepted by the borrower or not. The disbursement in the account can only be done when the sanction is accepted by the borrower. Why I said it is most important? Because I found some cases where the interest rate has not been accepted by the borrower. Account become NPA, the sanction terms and condition has not been agreed by the borrower. In case of renewal, it is most important. Because take an example, last year borrower was performing well. The interest rate is taken example is 9.25. But this year, the category or external rating or the internal rating of the borrower has been fallen down. And it came to 1 or 2 notes down to the, which is last rating. In that case, bank will increase the rate of interest by 1 or 2%. Then the terms and condition and renewal sanction letter should be accepted by the borrower. Then only you can increase the rate of interest. Otherwise, borrowers will say, no sir, I am not accepting the rate of interest. I will not make the payment because I have not accepted the sanction terms and conditions. You have increased the interest rate without taking confirmation of ourselves. If you would have informed earlier, then I would take over this account from your bank to some another bank. So if this case will be there, then if account will become NPA due to non-repayment of interest, non-serving of interest, and this person will go to DRT, the DRT will have to support to the borrower because yes, the interest rate and sanction terms and condition has not been accepted by the borrower. So the document, pre-disbursement document and post-disbursement document. Now document is also have important point, that is security document. As per all the sanction note, as per our policy of all banks, the disbursement of the loan should only be done after doing a property document, after making a document, property document, which include the surrender of title deed, equitable mortgage, whether it is registered equitable mortgage or it is an unregistered document. If the property under construction has been financed for the purpose of construction, then it should be tri-party agreement. Then these documents should be completed, then only disbursement should be done, or the sanction terms and conditions, whatever the case. We found some problem in this documentation. The construction or loan, the loan has been given for the purpose of construction of house in the name of husband and wife. This is just an example which I came to know during my audit. The loan has been sanctioned based by party agreement. Later on, in the name of husband and wife. Later on, there was dispute between husband and wife. The equitable mortgage has not been done. Wife has denied to repay the loan. Husband also said that no, this property is jointly in the name of husband and wife, so I will not making the repayment. Eventually, the loan become NPA. Now, in the case of bank, there is no security available because the EM is not there, the sale deed is not there, or no document in the name of the car. So this loan becomes directly a loss. Why I said is loss asset? Because as per the IRAC provision, if a security value to the branch is reduced to less than 10% of outstanding value of the loan, then I should not go into the categorization, regular categorization of loan, that is substandard, doubtful, D1, D2, D3. It should directly go into the loss asset. So bank has to make the provision 100% on this. So our more responsibility is to check the loan account which has been sanctioned in the previous year for the construction of property, or the loan account in the sanction during the year. We should check that the document requirement has been done. Now, this is the points which are pre-disbursement or post-disbursement communication. We all know that banks are good at sanctioning but bad at monitoring. Now, all the loan and monetary accounts should be, monitoring of the account should be checked very properly. What should be commented? I'm giving an example of monitoring is the perfect example. You all know that the stock statement. If the stock statement is not timely submitted, the DP should not be given. Then it is not about only timely submission, but also it is properly submitted in the format of the bank account. And we all know that we are not getting any stock statement in the format prescribed by the bank. So what should be done? Sir, we should mention that the stock statement is not in the prescribed format. If the creditors has not been considered, then we should go for the average creditor shown in the last 2-year balance sheet. So I'm taking an example for that also. If a stock statement submitted by the borrower in the whole of does not have any creditor, but in the balance sheet submitted for last 2 years, it is regularly showing the creditor amount, then how can the bank accept that there is no creditor in the business and DP can only be given in the stock on data? Then what we should do? We should calculate the DP on the date of the balance sheet or the 31st March of the last year as well as this year. And average creditor should be taken. Where we should comment, there is a specific point in the LFAR that the stock statement, whether it is submitted by the borrower, it is in the prescribed format or not, whether the same has been scrutinized by the bank or not. Merely receipt of the stock statement is not sufficient. The bank officer should scrutinize. They should calculate the DP based on the margin or the creditor shown in the bank. So if you are finding that the creditors has not been shown in the stock statement, you should comment that no, the required detail has not been given by the borrower. So review monitoring is also coming in the stock statement, submission of financial statement, QIS and FFS, quarterly information statement, or the stocks audit report in the applicable cases, or the external rating, as the case may be. The review and monitoring point are more important in the cash credit account, because if there is a change and you are finding some account in the SMA list, then these are accounts should be checked for the review purpose in a more precautionary manner. The stock audit is in applicable cases has been done or not. If a stock audit has been done in the twice in a year or once in a year, if the borrower is non-cooperative in the stock audit, why it has been done? You can also plan in review and monitoring. If you are finding some instances where you want that you should do the visit of the borrower premises, then you should definitely plan for that. Many of the people chartered accountant ask me, sir, whether it is under review of us or not, whether we can done the visit during the statutory audit to the borrower premises or not. I said yes, we can, because if we want to sustain our point, if we are finding the borrower banker is not agree on your point which is raised by you, but you are finding the point, then you can go and visit and can discuss with the borrower. Yes. With this, all 5 points are credit appraisal, sanction disbursement, documentation, review, monitoring, and supervision. Now, this is not the whole point in advances. I will covering the few major points out of this one. I am about to in committee. Any of the member in committee can tell me the how much time I have been given when I
10 minutes.
10. Okay. I will be taking a more 10-minute point, and thereafter we can take question and answer for 5 minutes. Okay?
Yep.
Yeah. The purpose of advances points are like SBA should obtain entire loan book and select the reasonable sample, as I discussed. Large advances for more than 10% should be covered. Each type of loan and advances should be selected. List of account examined to be included. The most important point is quick mortality cases. If any account become NPA within 12 months of the sanction, last year sanction, this year become NPA, then there is a chances of fraud in that case. You should check the very properly. Interest rate in the system. Credit facility sanction beyond the delegation, which I already discussed. Loan disbursed without complying the terms and conditions. As I said, working capital margin, mortgage should be done, confirmation of the party, the stock audit should be done. Whatever the three sanctioned comes in. Guarantee. The most important point is guarantee document. If loan has been sanctioned and it has been mentioned in the loan that the director should give a guarantee or partner proprietor should be given a guarantee document should be compiled. Sir, I want to cover one more point that any non-compliance of sanctioned terms and conditions will attract the penalty interest of 1 or 2. So there can be huge amount of revenue leakage in that case. Take an example, a loan has been sanctioned for 10 crore rupees. The director has not given a guarantee for more than 1 year. 10 crore, 1% or 2% is the case may be. A good amount of revenue leakage can be there. Non-execution of necessary documents, non-registration of charges to ROC. My request is take at least we should take 5 samples where the loan has been given to a company, whether the creation of charges has been done or not. Lien on deposit. If the loan has been given on the deposit, we generally do not check this account. The lien has been marked or not. At least 5 times samples should be checked from the loan against deposit or OD against deposit, whether the interest has correctly been charged in the system or not. If the FD has been renewed, whether the effect has been taken on the loan account or not. Because in the last year, the FD interest has been increased. Whether the interest rate on loan account has been also increased or not, we'll have to check. External rating, it is one of my favorite points. In many of the banks, the limit is 25 crore rupees. In some of the banks, it is 50 crore rupees. The external rating has to check and update it in the system. The reason is, if any degradation in the rating in the last rated, if it is not updated in the system, then there are good chances of revenue leakage. Because all the banks rating rate of interest are decided based on external rating in applicable account. If there is a one notch down in the external rating, it will require interest rate revenue leakage, and there will be chances of MOC in your case. Review in your pending. You should check it very well. We have started the audit today itself, and we found 11 accounts where the short review has been done twice, even without any documentation. RBI has given a special direction, a special circular, which says the bank can done 2 short reviews within period of 180 days by the competent authority, but it should be supported by the financial document. Means short review should also be considered as a review only. The financial requirement should be completed. At least if you are not getting the financial statement, the bank should take estimated GST return or whatever the document. And based on that only, the renewal or short renewal should be done. If you are finding that renewal has been done based on a single paper or on request of the borrower, you should ignore it. And you should consider that no, not at all short review has been done. In that case, if it is 90 days expired, you can mark this, you can give the MOC. For sure. You can say short review is not supported by the document. Further, it is beyond the delegation because in most of the cases, short review has been done by the branch. Submission of stock statement and cover. Kindly check all the stock audit report. Audited financial statement, you should check. If it is not submitted, if today till the date of audit, if the financial statement has not been received in the applicable account, then you can charge the penal interest because every bank, the financial statement should be submitted up to the November month. So December, January, February, March, there is chances of revenue leakage for 4 months. Inspection pending. This is many of the questions people ask me questions are inspection हुआ नहीं है. So if you are concerned whether the inspection charges has been debited in the P&L, debited in the account, and secondly, the inspection report is there or not in the file. If it is not, you should not rely the inspection. Periodical. Overdue in the account sanction. Valuation in the NPA account. You should take the valuation report. Check it whether the valuation report has been taken or not. And the realizable value of the property has been updated in the system or not. Because in case valuation has been done, but not updated in the system, then the provision has not been correctly made. Comment on adverse feature of the 5 account, upgradation of account of bank. So this has to be checked very properly. Because RBI mandate daily marking of NPA account. RBI says the recovery of interest should be checked very properly. It should be coming from the business sources only, from the business. If a recovery has been done from the director personal account, whether it should be considered as a proper recovery or not, I will not agree on that. I will so no. The recovery in the NPA account is not from the business sources. The account should not be updated in my case. So it should be coming from sources, genuine sources of business. Other asset is sundry and suspense account is more. Sundry and suspense, everywhere whenever I am taking a session, I said that if you are not able to check sundry and suspense account for the whole of the year, at least try and check for last 15 days. Because all the corrections has been done in the last 15 days, you will find that many points which is against the policy of the bank. So kindly check for last 15 days. If it is possible for you to check the whole of the suspense account for the year, you should go it. If not, then at least 15 days. If you are checking the suspense account and sundry account for the whole of the year, you will find that some transaction in the debit and credit with the some loan account and CC account has been done with the suspense account in many of the banks to save an account to falling under NPA. I am taking an example of 2 minutes because it is more important. All the bank has tried to save an account from NPA by using a sundry account. How? If a CC account interest has not been paid or the recover within 90 days, then the account will become NPA. So if account has been sanctioned for 5 crore rupees, right now outstanding amount of 4 crore rupees, interest debited in last 3 months is 3 lakh rupees, still the account will not become NPA because the reason is it is within the limit. Now, if there is no credit in the system and the credit is not sufficient to recover the interest which is debited in last 90 days, the account will become NPA. So banking systems consider entry as a credit. If any credit entry is coming from anywhere, then it will treat that no, it is recovery. So banks are trying to do something. They are making a debit to suspense account, credit to CC account. And again, the reversal of same amount entry will be passed from the suspense account. So that it shows there is a recovery in the bank account of interest and the account will not fall into the other asset is okay, liability. So in liability, my major point, which is lacking bank audit, that is bank guarantee and LC. It should be checked very properly. In case of bank guarantee, I want to submit only one point. Kindly check whether the bank guarantee classification is correctly done or not. When I am talking about classification, I am talking about classification into performance bank guarantee or financial bank guarantee. Why it is important? Because from the risk side, it is also important, and from the revenue side, it is also important. In all the banks, in the performance bank guarantee, the income is chargeable a lesser amount, that is 2% or 1.5%. In case of financial guarantee, the charges of guarantee commission is more, that is 2% or 3% as the case may be. So at least 1% interest rate, the commission gap will be there in the performance or financial guarantee. All the banks classify financial guarantee into performance guarantee only to give benefit to the borrower. Now, how to know whether the guarantee is performance guarantee or the financial guarantee? You will not find anywhere in the financial guarantee that whether it is performance or in financial. We have to read whether it is performance guarantee or the financial guarantee. So we have to check. I'm taking in session because it is already 4 p.m. I have to complete the session. So with profit and loss account, we should check interest rate, processing fees, inspection charges. Any modification in sanction terms and condition also required the charges collection. Secondly, processing fees, inspection charges, documentation charges. With this, all charges will be there. You should check how to check whether the all charges has been recovered. you should take the P&L account, all the ledger, compare with the last year. It is the best shortcut to compile with the checking whether the interest or revenue booking has been done correctly. If you are finding any major divergence, should be checked. I will request the committee to share this PPT because I have highlighted some points which will helpful for the members.
Sure, sir.
Miscellaneous one last year LFAR, I want to summarize in last 2 minutes. Miscellaneous is last year LFAR, kindly go and read it. Concurrent audit or internal audit report. You will, sir, we are doing audit of the bank where 365 days, many of the loan has been sanctioned. There are non-compliances or non-compliances of sanction terms and conditions we can't find in 5 days. You can get it from the concurrent or internal audit report. Kindly go and check that. Stock audit report is one good point where the major advances you can find any deviation or if anything there. Point to remember, I just please plan and update your LFAR on daily basis. Discuss point with your team. Sir, my request is kindly don't make the LFAR on last day. You should compile the point of LFAR on daily basis. Discuss with your point on daily basis. Depute one person on for making of LFAR because on the last day compilation will create a problem and you have to sign in hurry. Many of the important points which you have worked upon, but you can't compile and can't report in the LFAR. So it should be part of your regular audit process. Don't give yes and no answer as I already mentioned. If any MOC is there, kindly not mention only in LFAR, pass an MOC. Whenever you are making an MOC, kindly make a detailed note. Why you have passed this MOC? A short note of annexure is not sufficient because the branch or bank may challenge to the central security that the MOC has not been correctly filed, correctly prepared, or without any reason has been passed. So you should mention, kindly attach an annexure in the MOC if there is insufficient space to write something. Take a soft copy of first, this is my personal experience, take the soft copy of first branch for the next branch so that it will be helpful and save you a lot of time. Key focus area in the LFAR, security value I already mentioned, plant and machinery. In case of D1, doubtful 1 and doubtful 2 category, if the security is plant and machinery, kindly reduce the value to realizable value or the depreciated value as the case may be. In case there is a devolvement of PG and invocation of LC and it is debited to the separate account, kindly confirm that the recovery of that amount is done within 90 days or not. If it is not done, then the main CC account as well as that loan account both will become NPA. With this, I try to cover the majority of the point in LFAR and hope I am able to cover a little bit major point of the LFAR and in the given point on a given period of time. I have taken a 5 minute extra, so I'm sorry for that. And if there will be any question and answer, then I can take as per your opinion, whatever you say. And I am really thankful for the committee, CPA committee, Rajabai, Satish Gupta sir, for inviting me. Satish sir is like guide to me. He always say and motivate to me. So I'm thankful. And,
It's our pleasure, sir.
Yeah, best wishes to Arpit Bhai for the next. Thank you so much.
So now we can take questions. One question is, if the outstanding balance of an advance is below 10 crore, but the sanction limit is rupees 10 crore, then how do we calculate the 10% on outstanding?
Very clear, it is outstanding value. Outstanding should be completed, non-funded and fund-based, no problem.
Okay, sir. Another question is, adequate insurance of stock on which amount? As per stock statement, as per loan amount, in which margin, or as per stock shown on audit report of unit? I think that on stock statement value on which we drive DP.
Rajabhai, this is a very good question. The person who asked you this question, he's practically done something. Because the reason is, stock in balance sheet is 2 crore, stock in stock statement is 5 crore rupees, and insurance has been taken for 1 crore rupees. That is equal to loan amount. Then it is a problem. On what amount insurance should be taken, in my opinion and your opinion, is 5 crore rupees. If it is taken in 1 crore rupees, it means the stock is only of 1 crore rupees.
Yes,
then
sir.
we should take the stock statement itself. With no average balance stock is shown in the last 2-year balance sheet. My humble request to each and every one of you, kindly compare the stock statement for the month of March with audited financial statement. If you are getting a differences of more than 5 or 10%, then you should accept only the stock or book date value which is given in the balance sheet itself. Even if any of the people says 25 तारीख का ले लिया था, 26 का ले लिया, 28 का ले लिया, sir, the DP should be given based on the average holding of stock and ledger. That's it. It is not on 31st March and 25th of March. The average holding of stock should be taken. So your answer is very correct based on the stock. Next.
Okay, sir. Another question is, sir, plant and machinery realizable value and WTV, whichever is lower, should be taken.
Sorry, realizability or sir,
plant and machinery value.
This example for D1 and D2. So if an account has fallen into D1, D2, then it has already been NPF since last 2 years. If any realizable value to the plant and machinery is there, in the opinion of bank, the bank must have realized it. Is it correct? In my humble opinion, the bank has hypothecation on the plant and machinery. It has acquired it and tried to sell it. If it is not sold out for any reason other than legal reason, that is court case, then in my opinion, this should be reduced to 0, because bank is not in position to sell this property, sell this plant and machinery, or recover fetch any value. So even if there is a valuation, my opinion is reduce it to 0. But if it is, the bank is not able to sell this property due to some reason of court case or whatever the reason, then the realizable value should be. Or there is nothing in your record and it is D1, then depreciation value is the best example.
One question is, sir, can promoter bring margin from money from already ongoing CCOD? I think no. Diversion of fund clearly.
In case of proprietorship firm, I can say yes. In case of private limited, I can say yes. But why? The reason is the RBI has discontinued current account in all of the cases. In case of company, a company does not have current account. My opinion may be different with other people. Because in case of company, there is only CC account. If you will ask me, then I can take a margin from somewhere else. From where I will bring? There is no current account, na?
Yes, sir.
I am correct. In case of proprietor, you can say. In case of partner, you can partnership firm, you can say. In case of company, if I don't have a current account, so the margin money can be bring from the CC account, subject to CC is functioning very properly.
Right.
Otherwise, if you are finding some deficiency in the regular operations of the account, then you can challenge it. The margin which is bring from this account is not agreeable.
Yes, sir. One is my question, sir. As per stock statement, DP is not adequate.
Stock
But
statement DP is adequate.
The account is overdrawn. Regularly, the account is overdrawn. But the party create account in while 3 months. Means 60 से 70 दिन में एक बार अकाउंट वापस क्रेडिट में आता है, फिर लिमिट यूटिलाइज होती है. तो कंटिन्यूसली 90 डेज का भी ओवरड्रॉन नहीं है.
यस करेक्ट.
तो इन दैट केस
सर राजा भाई, आपका क्वेश्चन एक बार मैं वापस समझना चाहता हूँ कि आप किस पर्सपेक्टिव में पूछना चाहते हो. वेदर द अकाउंट इज कंटिन्यूसली ओवरड्रॉन बिकॉज ऑफ इंटरेस्ट लेविबल?
नो सर, बिकॉज ऑफ डीपी.
ड्रॉइंग पावर इज नॉट सफिशिएंट.
यस सर.
तो इफ द
बट अकाउंट 60 से 70 दिन में एक बार पूरा क्रेडिट में आ जाता है.
पूरा क्रेडिट में आ जाता है.
हाँ, कंटिन्यूसली 90 डेज तो ओवरड्रॉन रहा नहीं सर.
सर इन दैट केस यू शुड चेक हाउ दिस अमाउंट व्हिच इज कमिंग फॉर रेगुलराइजेशन. आपका अकाउंट जो रेगुलराइजेशन के लिए आया ना, वो पैसा कहाँ से आ रहा है? सर I said that if account become regularized from the sources fund which is non-business sources, I am not treating as a regular operation. I am not treating that this account is regularized. I will ignore that amount and can mark this account as an NPA. It is very clear. EWS, early warning signal. Sir, मैं भूल गया हूँ. My request to everyone, kindly see the early warning signal. There are 40 to 48 points. एक एक लाइन के पॉइंट्स है, काइंडली गो एंड रीड दैट. These are the signal which intimate you there are chances of account falling into NPA. So
Okay,
this
sir.
is one of the example you shared.
Thank you, sir.
So if any question I can take, otherwise the committee may
No,
forward
no.
to us,
Okay.
or anyone wants to share, they can write over the email. I will reply. I will try to reply because I am also doing the audit.
Okay. Thank you, sir. Thank you, sir. You explain all of us in very easy manner how to do branch audit, how to report LFAR. We start audit, we check advance, we prepare MOC, but in last LFAR blank. You tell us how can we focus on LFAR. Okay.
LFAR should be part of ongoing process, not of the last year. Because
This is
we are good at working but bad at reporting. This is my general framework based on after looking at a 2000 LFAR, 3000 LFAR, whatever I read. We are good at working but bad at reporting. So we should focus that whatever work we have done, we should try to report it as much.
thank you, sir. Thank you so much for wonderful session. Thank you. Thank you.
Over to Arpit Bhai. Thank you.
Thank you. Now today our second topic is adjudication proceedings in GST, prerequisites and precautions. For that, our speaker is CA Arpit Haldia sir. He is practicing as an advocate presently and has been a practicing CA since 2002 and handles areas relating to GST litigation and compliances. He has also authored 9 books on GST. He has been a regular speaker since 2007 in seminar, webinar, conferences, and his article has been published on GST, VAT, direct tax, and has been visiting faculty and trainer for members and officials of CGST, SGST, and other government institutions. Now I request to CA Arpit sir for start the session.
Thank you, Rajesh Sharma ji. First of all, I would like to extend my gratitude to CP committee for giving me this opportunity to share my thoughts on GST adjudication proceedings, and my congratulations to my co-speaker for a wonderful session on bank audit. And as he had said in the starting also that it's very difficult to summarize the entire session of LFAR in 1 hour, but he has done a great justice to the topic and the practical issues which he has raised. It was a great deliberation. I was there, although I'm not conducting any bank audit, but still somewhere down the line in the past years I have conducted, so I could associate with what he was telling on various issues which are pertinent in the bank audit. And congratulations to the MOC also for covering the session. So starting with today's topic allotted to me. So is the PPT visible, Rajaji?
Yes, sir.
Okay, thank you. Great. So my today's topic is on the opposite side of what was the earlier session. That is now the adjudication proceedings in GST. And starting with the topic given to me. So first, let us discuss what is the concept of assessment in GST. See, we all know that how the adjudicating proceedings take place under section 73, 74. But prior to that, let's concentrate on the concept of assessment in GST. Section 2, clause 11 defines assessment. Now, if we see the definition of assessment, assessment means determination of tax liability under this act. So by this terminology, it is understood that section 73 and 74 is being covered by determination of tax liability under this act. But the definition of assessment goes further and says and includes self-assessment. Now this for me is the most important part of the definition of assessment. That assessment includes self-assessment. Now what is the scope of self-assessment? Section 59 of CGST Act defines self-assessment. And it says that every registered person shall self-assess the taxes payable under this act and furnish a return for each tax period as specified under section 39. So, what is self-assessment? Whenever I am filing my 3B, which is a return under section 39, I am required to self-assess the tax, that is the output liability. Then I am required to assess the input tax credit. And after deducting input tax credit from the output tax, I am required to pay my tax and then file the return. So whenever I am filing the return and whenever I am getting the acknowledgement of the return that GSTR 3B has been filed, it means that the first assessment in GST is completed. Please mark the word that the first assessment in GST is the return which has been filed under Section 39 of CGST Act. The first assessment is not Section 61 scrutiny, Section 62 best judgment, or Section 65, which is audit by department, or Section 66 audit by professional, or Section 67 search either inspection, or Section 70 or 71. The first assessment in GST is Section 59, that is filing of return under Section 39. So whenever I get an acknowledgement your return has been filed, that means the first assessment has been completed. Why I am emphasizing on this part? Because once an assessment is complete, then the onus to prove that the assessment was incorrect is on the person who is challenging the correctness of the assessment. So therefore, if I have filed my 3B, I have reflected a liability at 5%. Now the department challenges that the liability is at the rate of 18%. The onus is on the department to prove that why my assessment of liability at 5% was incorrect. Therefore, they are not only required to provide the reason, but at the same time, they are also required to provide the HSN in which they seek to levy tax at the rate of 18%. The entry number of the notification which provides so, along with the correct place of supply. There cannot be a notice challenging the self-assessment which says that why not tax at the rate of 18% be levied. It has to be corroborated, supported with the reason, the entry, the HSN, and the correct place of supply and the correct time and value of supply also. So this is how the concept of self-assessment has been provided in GST. Now, at the same time, when we read Section 59, we also have to keep in mind Section 155. Because precisely because there was a provision of Section 59 of self-assessment, there was a requirement of Section 155. Now, what Section 155 says? It says where any person claims that he is eligible for input tax credit under this act, the burden of proving such claim shall lie on such person. So Section 155 goes contrary to Section 59. And it says that if you have claimed an input tax credit, the burden is upon you to prove that you are correct. The burden is not on the person who is challenging the claim of credit to prove that you are incorrect. So had Section 155 not been there, not only for output liability, but for input tax credit also, the burden of proving that the assessee is incorrect would have been on the department. But since Section 155 is there, so therefore for input tax credit, the initial burden is on the taxpayer to prove that he is incorrect. And the initial onus is on the taxpayer to prove that he is correct. And for rest of all the issues which are being raised by the department, the initial onus is on the department to prove that the assessee is incorrect. So Section 59 and Section 155 goes hand in hand. And that's why a perimeter provision of Section 70 of Karnataka Value-Added Tax, wherein the famous judgment of Ecom Guild Trading Company has been given by Honorable Apex Court. It was provided that the onus is on the taxpayer to prove that he was eligible to claim the credit by furnishing the 6 documents, including the invoice, the payment proof, the proof of movement, the payment of the freight receipt, and the proof of payment of the freight. which would substantiate that he is eligible for ITC. And since for no other provision, since for no other issue, there is a provision like section 155. So for all issues other than ITC, the onus is on the department to prove that the assessee is incorrect. And only for ITC, the onus is on the taxpayer to prove that he is correct. Why I am emphasizing on section 59 and 155? Because section 59, read with section 2, clause 11, barring section 155, gives a protection to the taxpayer that whatever he is assessed would be deemed as correct, and in case anyone is challenging it, the onus is upon him. So therefore, if an assessee is receiving a show cause notice which is not discharging that burden, then he is very well within his right to challenge the validity of the proceedings. Now, this is one judgment from GST regime delivered by Honorable Calcutta High Court in June 2024, wherein this specific issue has been highlighted in a very clear manner. Wherein Honorable Calcutta High Court, relying upon the decision of Honorable Apex Court, said that the onus of proving the classification under specific tariff heading lies with the revenue authority, which must demonstrate that such classification aligns with the understanding of the consumer of common parlance. The burden of proof rests with the taxing authorities herein. The respondent authorities to substantiate their claims regarding the taxable nature of particular case or item. Mere assertions in this regard hold no weight. So whenever department is challenging the correctness of the liability ascertained by me, mere assertion or mere claims without being backed by proper reasoning would not hold any weight. So therefore, whenever we are receiving any notice which is challenging any issue other than ITC, we have to first see that whether the burden of proof has been discharged by the revenue authority. Another case from pre-GST regime. This is Honorable Apex Court in case of Cement Marketing Company India Limited versus Assistant Commissioner of Sales Tax, wherein the assessee was challenging that the freight being received by him is not leviable to goods. So therefore, he reflected the same in case, under exempted sales. The department said that this is a false claim and therefore they initiated proceedings against the taxpayer. Honorable Apex Court said that the assessee has an interpretation that this amount is not liable for levy of tax. Therefore, he has, as per his understanding, shown it is under exempted sales. Now, if we go as per the interpretation of the department that whatever he has shown, if the department concludes that it is liable to tax, then in such case, assessee would have to first pay the entire tax and then come to the department for the litigation aspect, which cannot be the case. So if the assessee has an interpretation, he can very well show as per his interpretation, and whenever department is challenging that, it cannot be treated as a false declaration unless until it is pretty evident on the face of the interpretation, wherein supposedly a calculator has been interpreted as a computer. That in some cases may result in an incorrect classification with a false or falsified intent, but wherein there is a genuine interpretational issue. Mere not agreeing to what department has said would not be treated as a false declaration by the taxpayer. Now coming to the aspect of that how the notices have to be read. See, this is a two scenarios that how the notices are sometimes received by us. The first is notice was issued under section 73 for 2017-18 for ITC excess claimed in 3B vis-a-vis ITC reflecting in 2A. Now on the face of it, it seems correct that the notice has been issued correctly. But if we go deeper down what has been written, the only provision which has been mentioned in these lines are section 73, which is for ITC wrongly availed or wrongly utilized. Section 73 nowhere says that when the ITC would be treated as wrongly availed or wrongly utilized, it has to be supported by the provision which provides or clarifies or specifies that in which case situations the ITC would be treated as wrongly availed or utilized. So supposedly, let's take an example that for 2022-23, I take an ITC in say in January 2024. Now there is a violation of section 16 subsection 4. So ideally I receive a notice of section 16 subsection 4 read with section 73. So in this case what I have written in my presentation, only section 73 has been written. That means it does not provide which section has been violated. And when we receive such a notice, the first aspect which should be highlighted in our submission, that the notice which forms a foundation of the assessment proceedings is invalid because it does not provide clearly the criteria by which my ITC has been held to be invalid. So a demand recovery section has to be supported by a proper section which lays down the criteria of ITC being ineligible or ITC being wrongly utilized. Now coming to the second aspect, second question which I have taken, the notice provided that why the penalty shall not be levied under the provisions of section 122. Now again, we receive commonly these type of notices. Now in this case, although it provides that why the penalty shall not be levied under section 122, it is mandate on the taxation officer to provide clearly that which is the specific provision under which the penalty is being sought to be levied. Because section 122 subsection 1 contains 21 offences, section 122 subsection 1A contains a separate offence, section 122 subsection 2 contains at least 10 offences, section 122 subsection 3 contains 5 offences on a broader view. So there are at least 35 to 40 separate offences provided in the section 122 itself. So mere reference to section 122 would not be sufficient for the purpose of initiating proceedings against me for levy of penalty. There has to be a specific mention of the provision of section 122. So supposedly there is a offence for which a penalty has sought to be levied, that wherein the tax has been paid beyond 3 months from the due date of filing of the return. So therefore, the notice should specifically provide section 122 subsection 1 clause 3 of the GST Act. So this is how we have to understand and go through the reading of the notices. So this is a Delhi High Court judgment given in July 2024, wherein they said that show cause notice invoked section 16(2)(c). That is, tax has not been paid by the supplier. But the order issued denied the ITC on the basis of no proof being received for the no proof being submitted for the purpose of receipt of the goods. So Honorable Delhi High Court said that for this the notice should have invoked section 16(2)(b) rather than 16(2)(c), and since the notice invoked 16(2)(c), ITC cannot be denied on another ground while issuing the order. So that's why specific mention of the provision which has been violated goes to the core fundamental of the proceedings. In this case, another Delhi High Court decision in July 2023, wherein authorities specified section 17(5)(b). Honorable Delhi High Court said that the notice of the order should clearly specify why section 17(5)(b) has been invoked. Merely referring or copying the provisions of section 17(5)(b) would not be sufficient. There should be a proper reasoning so that the assessee can reply to that notice, or assessee can challenge before the appellate authority that why section 17(5)(b) has been incorrectly invoked. Another decision by Honorable Apex Court, Mohinder Singh Gill versus, this is a 1978 judgment, although it is not pertaining to GST, but very relevant for GST regime, because whenever we file an appeal, most of the time what happens is that the appeal authority calls the officer for his comments. And while supplying the comments, the assessing authority provides a fresh reasoning for justifying the order. Now, the question is whether fresh reasons can be brought on record to justify the order. The basic theme is that the order should be a speaking order. What is a speaking order? An order which speaks for itself. Because subsequent to issuance of the order, the official becomes a functus officio. That means he cannot say anything. Whatever has to be said, it has to be said by the order itself. So fresh reasons during the appellate proceedings by way of submission of the letter can never be submitted by the officer during the course of appellate proceeding, or for that matter, any subsequent proceeding before any other authority. Now, this is a pre-GST regime circular, which is 19th January 2017, wherein CBIC itself has stated in the circular that the authority which is issuing the circular should clearly lay down the legal provisions in respect of which the person shall be put to notice. And whatever we have discussed has also been clearly specified by CBIC itself. And a circular is always binding upon the lower authorities. And if the circular has been issued even though in a pre-GST regime, but it is for a perimetria statute, it is still binding on the officers. They cannot deny that this circular, since it belongs to pre-GST regime, is not binding, because it is stating a fundamental reason which is equally applicable in the perimetria statute of GST, which is following the central excise or the service tax regime. Now, what happens sometimes is that prior to issuance of the notice, we receive an advisory letter from the department that since your supplier has not paid taxes, therefore you are advised to pay the tax along with interest and a penalty in the section 74. And what's more is that if we do not reply to that letter, when we receive a notice, the notice says that we have issued 3 letters to you advising payment, and since you did not make any submission for those letters, that means you had an intent to evade tax, and therefore we are invoking section 74 against you. Because had you been true, then you would have replied or paid the taxes. Now, this is in Allahabad High Court judgment in GST regime September 2024 said that the entire procedure for issuance of letter is unknown in the law. The counsel on behalf of the respondent, that is the revenue, was not able to indicate any provision under which such a letter could be issued by the authorities. So if there is no provision in the statute which say that a letter or an advisory can be issued by the officer to the taxpayer, therefore the assessee is not duty bound under the statute to make a reply to that letter. And if he is not replying to that letter, he has not made any contravention of the provisions of the statute. And once he has not made any contravention to the provisions of the statute, no penalty proceedings or a derogatory proceedings or a mens rea can be invoked against the assessee. If the assessee does not reply to a notice, yes, that is an offense. That is an incorrect step being taken by the taxpayer, because it is mandate that he has to reply to the notice if he has to prove himself that he is innocent. But if he is not replying to an advisory letter being issued by the department, it is not an offense. So this was about the reading of this, what are the prerequisites of the notice, and what is the validity of a advisory letter being issued by the department. Now, coming to the next aspect, that what are the do's and the don'ts during the course of the hearing? What are the precautions which have to be taken by the taxpayer, or what are the rights and the rights of the taxpayer during the course of a hearing? Section 75, subsection 4, which provides that an opportunity of being heard has to be given to the taxpayer, wherein either he has requested for the hearing or any adverse decision is contemplated against the taxpayer, even though he might not have asked for a hearing. So in either case, wherein assessee has asked for a hearing or even if he has not asked for the hearing, but the officer intends to take an adverse decision against the taxpayer, he is duty bound to give an opportunity of being heard to the taxpayer. These are only 3 decisions which I have referred, but there are multiple decisions in the statute. Multiple decisions being given by various high courts, wherein they have said that 75(4) has to be mandatorily followed, even though assessee might not have asked for the hearing, if there is an adverse decision being taken against the taxpayer. Now, what happens sometimes is that statutorily I am given a 30 days taxpayer either to pay or to file a written submission. What happens is, supposedly I have received a notice on say 5th of July. I am being given a time period of 30 days for filing of the reply, but the date of hearing is fixed on say 25th of July. Now, in this case, what Honorable Delhi High Court has said that an opportunity of being heard cannot be a date prior to the date of filing of the reply. Because if the assessee has been given a time period of say 30 days, what he would say on the 20th day when the reply has not been furnished. So first the entire time period has to elapse for the furnishing of the reply, and then only a valid opportunity of being heard can be given. It cannot be given prior to the date of the filing of the reply. So in case wherein we have come across a situation wherein a date has been fixed for hearing prior to the last date of filing of the reply, we can always raise a question mark over the validity of the proceedings. Now, sometimes what happens is that when we receive a DRC-01, it does not mention the date, time and venue of the hearing. It only mentions the date by which the reply has to be submitted. Now, there are multiple decisions of various high courts wherein they've said that date, time and venue of hearing has to be mentioned. It cannot be a not applicable mentioning in the DRC-01. Now, what happens is, sometimes we think that what grade would happen if not applicable has been mentioned. If a subsequent opportunity of being heard has been given, that means a compliance has been made. See, when we are drafting a reply, at the adjudication proceedings level also, we must ensure that all the grounds, whether they are procedural, whether they are on merit, whether they are challenging the jurisdiction, are part of a reply. Do not try to presuppose which ground would help you, which ground would not help you. If there is a violation, it has to be mandatorily part of our submission. This is a decision by Bombay High Court in 1976. Why I am referring to it? Because in the just previous slide, we have said that when we receive a notice, the date of hearing has been given as a NA. Now, what happened in this decision and how it links with the post-GST regime DRC-01 summary? Supposedly, the last date to issue a notice was say 31st of March. And on that date, a notice was issued, providing a date of hearing of 18th of April. Now, on 16th of April, let's assume that the officer comes to know that 18th of April is a holiday. So what he does is he shifts the date from 18th to 24th. Now, what assessee did that he challenged that the date of hearing has been correctly mentioned only on the date on which it was revised to 24th. And since the date of hearing was an integral part and a very important part of the notice, therefore it should be treated that the notice in its entirety has been issued only on the 16th of April. And since the last date was 31st of March, therefore the entire proceedings are invalidated because a correct notice, a true and a complete notice has only been issued on 16th of April. The department contended that what's the big deal? We have given an opportunity of hearing which was required to be given to the taxpayer, even though it has been given on 24th. Initially, it was fixed on 18th. So what's the big deal? The Honorable Bombay High Court said that correct mentioning of date of hearing is an integral part. It cannot be, if we accept what department is saying, then in such case, supposedly a notice can be issued with a date, say 35th of January, and later on it can be corrected to a particular date. So it cannot be a case, and in this decision, Honorable Bombay High Court quashed the proceedings. So we can take help of this decision while preparing a submission wherein a correct date has been, or any date of hearing has been subsequently given to us. And if that date has been given post the limitation period, we can always say that the complete notice has been issued beyond date. Can department give a time period of less than 30 days for filing of the reply? No. If the statute has mandate that a particular time period has been should be given for filing of the reply, that minimum period has to be given to the taxpayer for filing of the reply. Now, this is another interesting decision of Honorable Allahabad High Court in GST regime, wherein what normally happens is that 3 opportunities of hearing are being given to the taxpayer. And supposedly the taxpayer does not appear on, say, either of the 3, all of the 3 date of hearings. Subsequently, 2 months after an ex parte order is received, that since you did not appear, therefore an ex parte order has been passed against you. What Honorable Allahabad High Court has said, that when the last date of hearing has come, either and if the assessee has not appeared on that date, either the officer is duty bound to give a next date, or it is incumbent upon the officer to pass the order on that date. Now the question comes that how can an order be passed on the same date? In that case, the order sheet should specifically contain that the order has been reserved on this date and would only be issued on a subsequent date. But if no such observation is there on the order sheet, then an ex parte order passed after 2 months does not hold a valid ground. In that case, if 2 months time has been taken without recording that the judgment has been reserved, assessee should be given another opportunity of being heard. So this is how we have to see that whenever an ex parte order has been passed, whether there was a specific mention of the judgment being reserved or the order being passed on the same date on the last date of hearing. Now another issue which comes is that I have participated in the assessment proceedings. I have submitted all the documents to the best of my knowledge. But when I received the order stated that a particular document was not submitted, therefore order is not passed against you. What Honorable Gujarat High Court has said, that when the assessee has participated in the proceedings and the authority feels that some more document is required to be submitted by him, it is expected of the authority to give an opportunity to the taxpayer to furnish all that additional document also. It cannot be a case wherein even though the assessee has participated, still an order is being passed stating that particular document has not been furnished. And this is not a singular judgment of Gujarat High Court. There are multiple decisions of such nature by Honorable Delhi High Court also. Opportunity to file written submission. Now in this case, what Honorable High Courts have said, that opportunity to hear is different from opportunity to file written submission. Has to be given an opportunity to come and explain what he has written. So therefore, it cannot be said that merely because time was given to file the written submission, there is no requirement to hear the petitioner, because opportunity being heard is separate and different from opportunity to file written submission. Another decision by multiple high courts on similar principle, Gujarat High Court and Jammu and Kashmir and Ladakh High Court, that even if the taxpayer has not appeared on the date of hearing, but his written submissions are on record, an ex parte order can never be passed, because what he had to say is already on record through his written submission, and those written submissions have to be considered before passing of the order by the officer. You cannot say that since the petitioner has not appeared, applicant has not appeared before me, therefore it seems that he is not interested in the proceeding and I am passing an ex parte order. His detailed submissions are, if are on record, the officer is duty bound to consider those written submissions. Relied upon documents. Again, the circular of the board 19 January 2017, and there are multiple decisions of high courts on this issue also, that whatever are the relied upon documents which are not in possession of the taxpayer have to be submitted along with the notice to the taxpayer, and if they have not been submitted and if the taxpayer has sought those documents, it is a duty of the officer to provide those relied upon documents. He cannot straight away pass an order ignoring the request of the taxpayer to provide the relied upon documents. Request for cross-examination. If a third party statement has been relied upon against the taxpayer, and if the taxpayer has sought a cross-examination, and if the cross-examination has not been given, that oral evidence has no value against the taxpayer. That oral evidence, that is a third party statement, only has a validity against the taxpayer only when a cross-examination opportunity on being asked has been given and the assessee has properly cross-examined the witness. If he is not allowed to cross-examine the witness, that oral evidence does not have a validity. So therefore, whenever we receive a notice wherein an oral evidence or a third-party statement has been relied upon, we are well within our right to seek a cross-examination. And if that opportunity has not been given, that oral evidence does not have an evidentiary value. Now, this was all about the do's and don'ts of the hearing or the proceeding. Now, coming to the aspect of filing of reply and what are the key issues which are to be kept in mind while preparing and submitting the reply. Now, whenever we are preparing a reply, there are two questions. One is question of facts and second is a question of law. Now, what is the difference between a question of fact and a question of law? See, there are three instances given by me in this slide. First is that the order states that a taxpayer is not in possession of invoice. Now, this is a question of fact. It does not require any interpretation that whether I have an invoice or not. Second, supposedly the notice states that the goods were not received by the taxpayer. Now, this is again a question of fact. Coming to third, whether constructive delivery is a delivery contemplated under section 16(2)(b). I have not actually received the good, but my agent has duly received the good. Whether constructive delivery is allowed under GST or not, this is a question of law. Now, why I am emphasizing on a question of fact or a question of law? See, a question of fact has to be raised at the preliminary level itself. So therefore, whenever I am preparing a reply to a show cause notice and some facts have been stated, I should either admit them or challenge them. Because if I'm not challenging the facts, it becomes an evidence against me. So if an incorrect fact has been stated in the notice, therefore I should challenge that fact that this has been stated incorrectly. Else it would become an evidence against me. And a question of law, even though it might have skipped at the adjudication proceeding level, it can be raised subsequently. Why I am emphasizing on that? Rule 112 of CGST rules, wherein it says that an appellate authority or tribunal can deny submission of a fresh additional evidence. And they would admit a fresh evidence only when the taxpayer is able to substantiate properly that what were the exceptional circumstances which prevented him from submitting those evidences. Presently, it might be a case that an appellate authority or appellate tribunal tribunal has not been found. Appellate authority might not be invoking Rule 112 if fresh set of evidences are being submitted at appellate authority level instead of the adjudication proceedings level. but somewhere down the line, this might be used against the taxpayer. So therefore, a question of a fact or a submission of an evidence should be mandatorily furnished at the adjudicating proceedings level. Because non-submission or non-challenging of the facts might subsequently result in a decision being given against the taxpayer. There are multiple decisions of Honorable Apex Court wherein they have said that a legal issue can be raised at any stage of the proceedings, but a new plea relating to a factual controversy cannot be raised subsequently. So therefore, whenever we are preparing a reply, we have to segregate two issues. First, what is the question of fact? Second, what is the question of law? The question of fact have to be very clearly narrated, and the best effort should be made also to raise all the possible legal issues in the preliminary reply itself. Now, coming to the next aspect of what is the importance of a properly drafted prayer. See, what I have done, I have properly stated the facts, I have properly narrated the grounds on which I am challenging the order or I am challenging the show cause notice. Now the third part is how to draft a prayer. And commonly what is seen that a prayer is given the least importance while preparing the reply. This is a Bombay High Court judgment from GST regime wherein they have said that although they are declining to entertain the petition, but the prayer clause must refer to the precise order which are being impugned. The date of such order and the authorities who make such order should also be referred in the prayer clauses. Otherwise, it becomes difficult to deal with such petitions. Ultimately, these petitions are filed by or with the assistance of professionals, and therefore they should comply with these basic requirements. So a prayer has to be properly drafted, because what is the relief which we want? This is coming from the prayer, and if we are not drafting the prayer, an appellate authority or a court might say that you are not, this is not part of a prayer. That means you are not seeking a relief to this extent, and why you are raising this issue at the time of arguments. It should have been part of your prayer. So at that time, you might have to seek an opportunity to amend the prayer. So therefore, to avoid this hassle, it should be ensured that a prayer has been properly drafted while framing the reply. So this was all about how a reply has to be drafted and what are the prerequisites of a valid reply. Now coming to the prerequisites of a valid order. Now this is a decision by Honorable Bombay High Court also and Andhra Pradesh High Court also. What is the validity of an unsigned order? They have clearly provided that an unsigned order does not have any validity. So when I am preparing an appeal and I see that the order has not been validly signed, I should make it a part that this is a part of my grounds of appeal, that the order which is being challenged is not properly signed, therefore it has no validity or sanctity in view of the statutory mandate provisions. Adjudicating order to be a speaking order, we have already discussed, and this is what has been clearly mandated by Circular 19 January 2017, wherein they said that the order should be a speaking order which speaks for itself. Now, what happens is that when we draft a reply, how the grounds have to be sequenced, that is also a very important issue. See, whenever we are drafting a reply, the preliminary grounds on which we are challenging the notice itself, the validity of the notice itself, those grounds should come at the start. Supposedly, I say that the officer who has passed the order does not have a authority to pass the order. That means I am challenging the jurisdiction or the authority of the officer. This should be my preliminary ground. Supposedly, I say that the notice specified section 16(2)(c), but the order has been passed under section 16(2)(b). This should be my preliminary ground. Supposedly, I say that the notice has been issued barred by the limitation. This should be my preliminary ground. So whenever I am challenging the validity of the proceeding itself, not going on to the merit aspect of the proceeding, these should be my preliminary grounds, then my alternative grounds or my merit grounds should be there. So we very commonly we refer in the alternative and without prejudice to anything contained above and reserving the right to challenge the proceeding in the above grounds, we hereby state this. That means I am raising an alternative ground. And what Honorable Allahabad High Court has said that consideration to alternative issues can only be there when the main submission is rejected. So how I sequence my grounds, that also become an important aspect of how the reply has to be prepared. So therefore, I should raise a preliminary ground wherein I am challenging the validity of the proceeding, then going on to the merit aspect of the submission. Another decision by Honorable Bombay High Court that alternative arguments can never be considered as an admission. An officer cannot say that, see, in the alternative ground, you have already admitted that this is the amount you are ready to pay. No, sir, this is my alternative ground. In the main ground, I have challenged the entire amount. You cannot straight away jump to the alternative ground and say that this is an admission which is being made. So any order which either straight away jumps to the alternative grounds or considers an alternate ground as an admission is an incorrect order. Now, supposedly I have raised 10 grounds in my submission. A circular, again 19 January 2017, said that whatever issues, evidences or material on record have been brought by the taxpayer, each of those issues have to be examined by the officer. Another judgment by Honorable Madras High Court in GST regime July 2024, when they have said that all the ground which goes to the fundamental aspect of the proceeding have to be analyzed and negated and has to be discussed by the officer in his order. So all the relevant grounds have to be raised and properly sequenced in the reply which is being filed. Order cannot go beyond the show cause notice. This is a statutory mandate under section 75 also, and also coming from the circular issued by CBIC on 19 January 2017. Amount demanded in order cannot go beyond the show cause notice. The show cause notice has been issued for say 10 lakh rupees. The order cannot go and say that 20 lakh rupees is the demand. Again, mandated by section 75 subsection 7 and the circular issued by CBIC. One who hears must decide the case. Section 75 subsection 4 says that opportunity of being heard has to be given. So supposedly there is a situation wherein Mr. X, who is an officer, has heard the case and Mr. Y decides the matter. In that case, that order is an invalid order because the basic premise is that one who hears must decide the case. Sometimes we receive an order wherein the officer simply says that I am not satisfied with the reply, or he said that your reply is rejected as not being satisfactory and whatever demand was there in the show cause notice is being confirmed against you. Multiple high courts, all they have referred only two judgments, Madras High Court and Calcutta High Court have said that this is a cryptic order and cannot be a valid order denying the submissions made by the taxpayer. If detailed submissions have been made, they have to be discussed in detail. So this was all about the adjudication proceedings, how it has to be seen right from the inception, from the self-assessment which was made, from the notice which has been received, how to read the notice, how to frame a reply to the notice, what are the key aspects of the notice, how to appear during the proceedings, oral hearing, what are the precautions and the prerequisites for attending the hearings, and what are the prerequisites of a valid order, and if those prerequisites are not part of the order, how they can be challenged while we are framing an appeal. So I've tried to do justice with the topic for in the time which was allocated to me. I would hand over the session back to the MOC of today's session, and if there are any queries, I would be happy to take the queries.
Thank you, sir. One of query, one case draft audit report sent by department for 5 years, many months before, but still no show cause notice sent by them, neither in draft audit report they consider or submission. What to do?
Our audit report is issued under section 65. And if you go through section 65, it says that whatever discrepancy which have not been admitted by the taxpayer, mandatorily a notice has to be issued under section 73-74. So if a draft report has been issued months back and notice has not been issued, and supposedly notice is issued after the prescribed time limit for issuance of the notice under section 73-74, you are well within your right to challenge the proceedings on the limitation aspect. And secondly, section 65 audit report is approved by the commissioner. So whatever has been approved by the commissioner, that only can become part of the notice. So if the audit report has been issued under section 70, audit report has specified that why not proceeding under section 73 be initiated against you. A notice cannot go beyond that audit report and initiate a proceeding under section 74 merely because the time limit for issuance of the notice has expired. And if that is the case, you can very well challenge the validity of the proceedings, because there is a decision of the High Court wherein they have said that if an audit report is sought to be changed, then it has to be re-approved by the commissioner, and then we can always raise an aspect that what was the requirement or what was the fresh reason which were brought on record to change the section from section 73 to 74.
Okay, sir. Another question is, sir, whether registration of supplier is retrospectively cancelled by GST department, then can input avail having bill, e-way bill coming to a inward challan and payment thereof by check can be denied by GST department? What is remedy there?
What we have discussed is section 155 says that the burden of proof that I have claimed a valid ITC is upon me. So how I am required to discharge my burden of proof? I should have a valid invoice which is there with you. I should have paid the amount to the supplier which has been duly paid by you. I should have received the goods which have been received by the taxpayer. I should have a proof of movement of the good which is there. Now once this is submitted, the burden shifts on the department to prove that why I am ineligible for the claim of ITC. See, in all the provision of section 16 subsection 2, it is nowhere mandated that whatever ITC I have claimed, the registration of that supplier should be effective till eternity. My only requirement is that when I purchase the goods, the registration of the supplier should be active. And since I have the input is reflecting in my 2A, that means the registration was effective on that date. Now, once I've submitted all the documents, it becomes imperative for the department to impeach those documents first and say that these documents are not valid. If they have not impeached the documents, then next we have to see what section they have invoked. See, if the tax has been paid by the supplier and if its registration was active on that date, if I have a valid invoice, if I have received the goods and if I have filled my return, all the conditions of section 16(2) have been filled. Merely because of a subsequent event, a retrospective cancellation has been made, that cannot be a sole ground for denying me the ITC. I should see what section has been invoked, and if an incorrect section has been invoked, supposedly take an example that section 16(2)(c) has been invoked. I should say, sir, section 16(2)(c) said that tax should have been paid by the supplier. I am producing the evidence that he has duly paid the taxes. I am producing an evidence that the entry is reflecting into it. So therefore, section 16(2)(c) is not applicable in the given condition. So we have to be very categorical. First, discharge the burden of proof. Second, to see what section has been invoked. And thirdly, whether that section has been correctly invoked. And fourth, most important, do not hesitate in asking further documents from the department that what is the reason for cancellation of the registration of supplier. A copy of the order has to be supplied to the recipient, because an appeal under section 107 can be filed by an aggrieved party. And by cancellation of registration of my supplier, I am an aggrieved party. So I can also file an appeal against the cancellation of registration of my supplier. So therefore, if the copy of cancellation of registration has not been provided to me, I am well within my right to ask the copy of the cancellation of the registration of the supplier. And thirdly, why the registration has been cancelled and whether the supplies made to me were part of bogus supplies. If there is no such allegation, then I have complied with the provision of section 16.
Okay, sir. No other questions, sir. Thank you. Thank you so much. We are last 8 year facing GST difficulty litigation. We are facing many hurdles due to various litigation confusion. I am very much sure due to today's session. Now we are in comfort zone. This was wonderful session and wonderful speaker, wonderful audience, which are regularly connect with the session. Thank you. Thank you so much. Thank you, CPE committee. Thank you.
Thank you.